John Piper with the weekend video, and it's Saturday the 20th of January, and we're starting with the chart of the Dow this morning. This is a 15-minute chart. During the week I sent out a report saying that around the 26,000 level, slightly lower, there was a precise level, I forget what it was precisely, 25 something, 25.9 something, that the three legs of this new bull market from 2009 would be of equal length, about 70% increase on each leg. The middle leg was about 72%. So a fairly important sort of level where there was some equality between waves 1 and 3. So yeah, wave 1 and 5, with 3 being slightly longer, which is exactly what Elliot's looking for. As it happens, we have got a possible 5-way reversal on the Dow. So there's a 1 there, an A, B, C there. We've got a 1, 2, 3, A, B, C, 4, 5. That completes wave 3. So from there to there, we can count 5 waves down. 4, 1, 2, 3. Wiggling around there. 4, 5. So that does count as a 5-wave decline. We've also got an A, B, C, followed by another A, B, C, B wave, and then this C wave rally, possibly. This suggests that we could see a key reversal next week. So an extreme stop below there. Extreme stop of the system we give away to subscribers. So if you want it, then please subscribe. Yeah, so that could be a major opportunity to sell the Dow. Clearly, any move above here would negate that premise, and an accelerated decline here would confirm that premise. Although it could be an ABC, but we can still make profit even if it's just a small decline by moving stops and taking profits, etc., etc. Leaving the majority still running. So at the moment, if price is available come Monday, 26,042, so about 80-point stop for a possible, possibly massive move, although it's a little bit flimsy evidence right now. Right, the 4-hour chart on the DAX. We discussed this A, B, C previously, and this could be a wave 1. Looks at, well, if it is, it's going to see a pretty solid rally from here. A, B, C, 2-wave. So new highs look likely now. And we could see acceleration. That doesn't really time with what I said on the Dow, but that's what the chart pattern's saying at the moment. Looking at the FTSE, we go back to 2009. We can again count the clear 1, 2, 3, 4. Now this 5th wave coming in. So 1, 2. We get 3 to there, 4. Now a final 5th wave. So again, FTSE looks like, well, think of the DAX in fact, that we've got a bit more upside to come. So that doesn't necessarily mean that the possible sell signal on the Dow will be negated. It's an opportunity, a low-risk opportunity. That's what we're looking for. Chart patterns are never 100% reliable, but at the moment, FTSE looks positive. A little bit more to come. Right, gold. My preferred count at the moment is that we've got a 1, 2, 3, 4, and a 5 up to there. If so, then that's an A, B, C down to there, A, B, C rally here, with a C wave to come, with support here, and at 1300. I think we'll probably contain this, but I think a bigger sell-off is due at the moment. I think I'm expecting a very good year for gold. I think we're going to see much higher price on gold, and a very, very strong bounce on the cryptos as well. If everything goes according to plan, I'll be looking to transfer crypto profits into gold. I think 2019 could be a little bit quieter for cryptos. I'll have a better view, of course, in a year's time. But at the moment, I think another bumpy year for the cryptos could exhaust that particular market for a while. I'm sure it'll go on, but I think the next year might see the fast action again. But as it gets bigger and bigger, that'll slow down. So if for example, we went up from the maximum of about 800 billion market cap in December, and so another 10 times you're up to a trillion, 10 trillion. or thereabouts. Now that's becoming sizable, and so I'm not thinking that to be achieved this year. My estimate was about 10 times rather than 20 times, or maybe even 5 times. So once the market becomes bigger, then you have to expect the volatility to lessen. So I think this year is an important year if you want to make very, very solid profits to get into the cryptos. But gold's also important. I think gold will see a very substantial rally. I mean, it could easily go up by 2 times this year, 3 times maybe. So again, an important market to be involved with, as I am, and as I know, a number of my subscribers are also. Anyway, at the moment we're in a correction, so I'm looking for a good buying opportunity coming forwards, and I'll be recommending stock plays and option plays in my private trading room, both on gold and on the cryptos as they become available. Actually, currently very few stocks. Options on the way though. Well, this is Bitcoin since the peak around 20,000. The pattern is A, B, C, A wave, A, B, C, B wave. And it could be A, B, C, C wave in fact. C waves are normally 5-wave affairs. But we've got this new rally. I wasn't expecting this rally here. I thought we were going to go down at this point, either to retest that low or to make new lows with support around 7,500 towards 8,000. But this latest rally has changed that picture somewhat, and it could be the lows already in. The key low actually is 13,000. Any move above 13,000 would negate the call for a 5th wave. If this rally fails to make 13,000, and it's not there yet, then the case for further decline remains in place. Now looking at the 15-minute chart, we can see the rally in more detail, and I'm counting this as a 1. There's a sort of very small blip here that could be 1 and 2, and that's a 3, 4, 5. This is an A, B, and C. We actually got a flat. I thought we were going to see a bigger sell-off down here. That hasn't happened. This is a sign of strength, and now we're up again. So it looks to me like it's a 1, a 2, and now a 3 starting up. As I say, 13,000 the key level. It goes above 13,000, then that would negate the call that there is a 5th wave rally coming in, and it would look like the decline is over. So I was hoping for a better buying opportunity, but it is what it is. I had bought some Ether and some Bitcoin near the lows or around the lows in the SIP as well. Those are still in place. And I'm looking to buy more if this continues. But even if we have got new upside action here, so if we would go above 13,000, we're going to see some kind of pullback. So again, I'll be looking to buy more at that point. Right, Ethereum saw the peak in January, not December. We had a clear A, B, C, sort of B wave here, bit of a triangle, and then A, B, C, C wave. So a complete A, B, C. We then had a 1, 2, 3, ABC 4, 5, so that can be new impulsive action. This could be a sort of weak flat. At this point, it doesn't make much difference. With the next leg coming up, now it's possible, having Ethereum just in a simple ABC, that this wave could be another ABC on the third. So it could be A, B, C, and then down again. I think that's pretty unlikely. I think the tide has turned. I thought one more sell-off is possible. I don't think this is going to stagger on into January, into February, as it were. Not impossible, of course. We should be able to tell from the tone of the rally, and we should get plenty of warning signs if that's the case. But right now, same really. I was holding short. I would have been stopped out by this rally. That was on spread-betting accounts. Otherwise, I'm long the coin, and I'm long in my SIP. So the short spread-betting was a short hedge essentially of the bigger position. And again, looking to add. Okay, that's all for today. If you found it interesting, useful, back to the report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.